Good day and welcome to SCO BRICS Insight, where we talk about what's really going on in the world of the BRICS. Now, there's a transatlantic gold rush taking place and the mass outflow of gold from the vaults in London to New York. Now, this is a very unusual concern, and the reasons for which is not exactly clear. I mean, the most common explanation is this fear. This also opens up space for conspiracy theories. In recent weeks, the gold market has been an interesting trend. Bullion from vaults in London has been flowing to New York. This phenomenon is particularly noteworthy given London's status as the global centre for trading of physical gold and the largest exchange for precious metals. Now, until last month, London and Singapore were the only competitors as centres for pricing and storing of world gold. In January, large quantities of the precious metal were concentrated in Russia, primarily in the vaults of the Bank of England, which are the second largest after the New York Fed. Now, it's worth noting that the situation is between Western Europeans and the USA. Russia and China do not sell or trade their gold in London or in New York. And since Russians were banned by the LBMA, the London Bullion Markets Association, all Russian gold is sold via the Dubai Gold and Commodity Exchange or in Hong Kong at the Shanghai Gold Exchange. In fact, countries of the BRICS avoid pretty much gold trading with Europe at all. Now, do bear in mind that Russia and China are the world's largest gold miners, producing almost 1/3 of the gold mined every year in the world. Now, before I continue, I'd like to make an appeal. If you like and enjoy my videos, you can help me fund the channel and my website, SCOBRICSinsight.com, to further develop it. You can do this by making a small donation, which is done by clicking at the thanks button at the bottom of this video screen. Everybody who donates does get a personal thank you from me, and I'm thanking you all now just for watching. I do appreciate you all. Please like, subscribe, and keep the comments coming. Now, the vaults, which are comprised of 9 fortified rooms within the Bank of England, houses approximately 42,000 bars of gold belonging to the British Treasury as well as many other countries' central and commercial banks. Additionally, in London, there are private vaults managed by global financial corporations. Traditionally, there's limited information available regarding the movement of gold, as the industry is known for its opaque attitude and its confidentiality. However, at the beginning of the year, the outflow of gold began to gain a momentum, and media outlets began to pick up on this. Currently, the vaults are allegedly understaffed, unable to cope with the sheer volume of bars being shipped in and verified out, resulting in a multi-week queue for assets to be withdrawn from the Bank of England, reported by Bloomberg. Now, transporting gold itself presents certain challenges. Firstly, the space in the cargo hold of commercial aircraft must be rented. Well, this is limited since insurance companies do not insure large volumes of gold cargo. Secondly, the bars must be smelted down from the London standard 400 ounces to the American standard of 100 ounces. This is normally done in Switzerland, whose smelters are also unable to cope with the influx of interest in people moving their gold from London to New York. Now, once it's smelted, only then can it be loaded onto a plane from Heathrow to JFK. Now, Trump has really spooked the market, and that seems to be the main reason for this excitement, which is not in its market implications. It's a threat of the duties from Donald Trump. Investors are forced to queue and move their wealth around the world, according to Evgeny Babushkin, who's head of development at the Russian brokerage PBSR. He believes that's the only logical explanation, is the fear of a new trade war between the US and Europe, which will break out sooner or later, and Washington imposing import duties on precious metals. Now, dealers are concerned they would be affected by these duties. If you look at the initial rates of 25% that would hypothetically apply to transatlantic gold, now the consequences for the holders moving it from London to New York is significant. Given that a ton of gold is currently priced at $94 million, 25% duty is a huge amount to pay in tax if you suddenly move it from London to New York. So you can understand why people are concerned. So I can see why the gold rush holders are in a panic to move from London to New York. Now, the most concerning aspect for precious metal owners is the unpredictability of the policy issues by the sudden and significant duty interest rate. I mean, Trump's bizarre behaviour of adding tariffs and then removing them is just incredible. I mean, things just happen so quickly, and the legislative restriction may longer will be officially bypassable. Now, recent reports of multi-week queues to access gold from the Bank of England vaults further underscore the challenges that are being posed by these dynamics. The claim that this is due to the sluggishness of the precious metal warehouse employees is not without serious question. I mean, but such a situation may contribute to the emergence and the escalation of the conspiracy theories that there's actually not enough physical gold around because it's been lent out, so that's also fueling the frantic demand. I mean, if your gold's there and it's been lent out without your knowledge, you've got a problem. Consequently, gold prices in New York have surpassed those in London, with the New York futures trading at a premium to the London spot market, reaching a margin of over $50 per ounce this year. Now, this development follows a similar trend that was seen back in 2022 during the COVID pandemic, when those who have successfully arranged for planes to be chartered and gold to be shipped to the US enjoyed significant financial gains. However, the newly emerged opportunity for price arbitrage between the two continents is not a cause for concern, a consequence of the gold's flight to the US. I mean, there was a similar situation in the case of physical silver, where the demand has led to profitable transportation of even this less expensive metal by plane. I mean, the ongoing significance in prices, however, fueling the current trend. I mean, from the US election to mid-February, stocks on the US COMEX exchange grew by more than 20 million ounces, equivalent to over $60 million, primarily due to shipments of metal delivered from London. Now, world central banks have also continued to purchase gold as countries seek to reduce their dependence on the dollar and protect their currencies from devaluation and inflation. In 2024, central banks purchased over 1,000 tonnes of gold, strategically employing it to safeguard the purchasing power of capital. Now, the current situation is having a significant impact on prices. The price of gold has increased by 25% in US dollars in 2024, with the current price of gold now standing at over almost $3,000 per ounce. And that's partly due to the transatlantic gold rush, which led to the surge in demand for gold. But it's also resulted in a slightly negative reaction in price, with gold prices ending the week in a decline for the first time since the beginning of 2024. Now, that's due to the fact that the movement requires significant logistics costs, which are shouldered by the sender. Technically, they're obliged to sell a small amount of the portion of gold to cover the cost and transfer the rest of their holdings overseas. Of course, any sale of assets, especially those that occur in haste, invariably results in a decline in the value of that asset. Finally, speculation that the US might revalue its gold reserves is fueling the excitement. I mean, currently their value remains at the 1974 level of $42 per ounce. And if they revalue their so-called holdings, that would give a $800 billion windfall to the US, while gold holders in other countries would actually see a decline in their wealth. And finally, speculation that the US might actually take its gold when it's being audited at Fort Knox, and we find out that perhaps the amount is not exactly as it was. I mean, given the fact that Russia has gold reserves of 2,000 tonnes and it's all very well documented, China's much the same. I mean, the US hasn't been conducted since 1974, and the full audit hasn't been since 1956. So, if the information regarding or rumours regarding a potential shortage of gold at Fort Knox will be made public, it could lead to a significant surge in gold and trading volumes. I mean, that again is just another conspiracy theory at the moment, but we know that conspiracy theories are down from 6 months from being a theory to being a fact. Now, obviously the authorities might be aware of the shortage within the American facilities and are deliberately withholding information to cover up the true state of reserves. Alternatively, they need to remelt it to American standard, disregarding the size of the bars, and that suggests a lack of transparency. I mean, the ultimate goal is to ensure the authenticity of gold, regardless of its ultimate destination. Now, the future of gold, whether it remains in London or in New York or Fort Knox, remains uncertain. However, given the reliability of information, it's unlikely that the Bank of England's vaults are likely to be audited at any time. Still, gold continues to be a timeless and timely conspiracy theory. Thank you for watching. Please like and subscribe. If you want to help me out, please click on the thanks button at the bottom of the video screen, and I'll see you all again soon. Thank you.